All right, so let's dive into it today. We're going to be looking at what the debt ceiling might be doing to the markets, how this could be a situation in terms of the markets actually being able to negotiate deals, how Bitcoin is going to respond. We'll take a little bit of a look at Bitcoin as well. We'll look at the charts, give you guys a little bit of analysis there. There's quite a few clips here also that kind of piece this puzzle together because there's a lot happening in Capitol Hill right now that could start to lean in on where crypto is moving, especially from a price point. So we'll do all that good stuff for you guys today. My name is Paul Barron. Welcome back to TechPath. All right, so let's get back into it. I want to go into a few things just to kind of frame this up for you guys in terms of what's happening this week, what's also starting to potentially move into the recession period, all of those kind of things. But I want to jump over to the Kobeisi letter and just get into it. I'll zoom in on this a little bit so you can read a little bit easier. But these are the key events this week. New home sales data happened today. Treasury Secretary Yellen speaks tomorrow. We'll get the Fed meeting minutes on Wednesday. The Q1 GDP data on Thursday. PCE inflation data comes in on Friday. And then a total of 5 Fed members are coming in to speak. So this is good. I mean, this will start to frame it up. I think obviously a lot of this is pointed to what's happening with the debt ceiling. So it's going to be an interesting week for price action. It's going to be an interesting week on Wall Street because I think a lot of people are still getting a little bit concerned about this. Just going over to CNN Business, debt ceiling woes could kill deal making on Wall Street. This is kind of what I alluded to just a minute ago. Couple of things here that I want to focus in on. Companies now finding financing difficult to the tightening credit conditions from stress in the banking sector, uncertain economic outlook, especially the risk from a debt default. This is obviously, I don't think it's going to happen, but the scenario is this is going to play into a lot of negotiation tactics, which is going to give one of the parties probably an upper hand. That's why it's been so long and they're lengthening this out. Is because everybody's trying to jockey a position here. Given the difficult financing from traditional sources, we also expect to see an uptick in private credit. So a lot happening in the credit markets. Building a thesis around deals is already quite difficulty given the lack of predictability in the economy and the growing threat, obviously, of the default, also challenging the economics for any deals in the works and delaying the timing on those deals. So that is another problem that's starting to play into this. I've talked to people in the banking industry. I talked to a lot of people in the high net worth group that we do some coaching on, and even they are starting to look at maybe either setting deals off from acquisitions, mergers, etc., because of what's happening around these kind of scenarios. Last on this article was a failure to raise or suspend the statutory debt limit will trigger a severe financial market turbulence that would be widespread and devastating. And of course, we've talked about this on the channel before. This I don't think ever happens because they just can't let it happen because it would be cataclysmic to the markets and the likelihood of recovery would not be one of those things that you just flip a switch and come back to. It's going to be interesting to see how and what position that Biden also with McCarthy finally come to in terms of how the Republicans, and it's really the Republicans that are pushing for this, mainly just to get more, more control on spending and obviously some of the budget components that play into this. All right, so Joe Biden basically speaks on the final day of G7 summit. He said some things here. I want to go back and we'll play this clip real quick.
Let us hear from President Biden at the G7.
Before turning the important work we accomplished here at the G7, I want to take a few minutes addressing the budget negotiations that I'm heading back home to deal with. Before I left for this trip, I met with all 4 congressional leaders, and we agreed the only way to move forward was in a bipartisan agreement. And I've done my part. We put forward a proposal to cut spending by more than $1 trillion, on top of the nearly $3 trillion in deficit reduction that I previously proposed through the combination of spending cuts and new revenues. Now it's time for the other side to move from their extreme positions because much of what they've already proposed is simply, quite frankly, unacceptable. And so let me be clear. I'm not going to agree to a deal that protects, for example, $30 billion tax break for the oil industry, which made $200 billion last year. they don't need an incentive of another $30 billion, while putting health care of 21 million Americans at risk by going after Medicaid. I'm not going to agree to a deal that protects $200 billion in excess payments for pharmaceutical industries and refusing to count that, while cutting over 100,000 school teachers and assistance jobs, 30,000 law enforcement officers jobs cut across the entire United States of America. I'm not going to agree to a deal that protects wealthy tax cheats and crypto traders while putting food assistance at risk for nearly 1 million Americans. And it's time for Republicans to accept that there is no bipartisan deal to be made solely on their partisan terms.
Let us.
All right, so a couple of things hit there, and that is that, first of all, the connection to different scenarios. I understand, their side of that, the negotiation is trying to save certain kind of programs. Ironic, from the defund the police program, and now they're trying to put money back into, this is just kind of crazy. But the point being is they're going again after the crypto market really in an unusual way, since this is normal process of any investment, process out there in the markets itself. So there's nothing happening in crypto that is different than happening on Wall Street, happening in any kind of investment class where you might use tax loss harvesting, you might do something in terms of capital gains deferring. All those kind of things are traditional and normal loopholes that are in the investing system already. So crypto is no different than any other property out there. It's just the volatility of that. And it has nothing to do really with what is happening. What I'm intrigued with is what was in the proposals that McCarthy and the Republicans were putting in there that would cause him to make that statement. We'll probably find out soon as we start to see these bills start to break out. Here was another clip, and this one also kind of getting into, let me pause that and go back here to the beginning. But this was Don Winslow, farce of this whole thing. Under Trump, there was a lot of debt ceiling that was raised 3 times. 40% of national debt actually accumulated under Trump. So this is not something that's new, is the point that I'm getting at. Listen to what he had to say.
And Republicans won't accept 1 penny in deficit reduction from closing tax loopholes. The farce of this whole thing is that under Donald Trump, we raised the debt ceiling 3 times. 40% of our national debt actually was accumulated during the 4 years of the Trump administration. And now they're not willing to talk about any revenue from very wealthy people as part of this effort.
All right, so what they're talking about there is simply raising taxes. This is really what it boils down to. Again, Trump was very protective of the ultra wealthy class. During that period of time when Trump was here, we saw, record level, increase in growth. Jobs, of course, exploded. We saw a lot of innovation happening, and we also were seeing a little bit of movement back to the U.S. Overall. But that he is right. The debt ceiling was raised for some of those reasons, and this is no different than anything else. I think it really just boils down to, are we still spending at the same speed that we were spending at 3-4 years ago, especially pre-pandemic, because I think that's what it boils down to, is what the Republicans have been trying to lock in. Here's a clip from Yellen, and she gets into this as well, talking about, whether or not this is even going to happen. Listen to what she had to say about that.
I would simply say, since 1789, the United States has a history of paying its bills on time. That's what the world wants to see. A continued commitment to do that. It's what underlies U.S. Treasury securities as the safest investment on the planet. And it's not an acceptable situation for us to be unable to pay our fees.
All right, so again, this is something I just don't think is going to be an issue at all. It really is going to boil down to how much are you give and taking. That's really what we're, because of the threat to this is still why the negotiations are going on. But at the same time, they're also being lengthened out quite a bit. And I think a lot of people know that it's just the pressure that the parties are getting put upon them. Here you've got Patrick McHenry, I think a crypto friend, talking about, as Secretary Yellen has already noted, POTUS has no authority to raise the debt ceiling using the 14th Amendment. The president is playing with an economic and constitutional crisis. and he should continue negotiating with the House GOP to avoid both. And I think that's the key. Biden is just in a position where he doesn't want to give up certain sacred cows, doesn't want to give up the new programs that are going into this. It's not as if these programs are going to be disappeared. It's that they're asking for more money for these programs. So just be aware of that. Now, sure, there's been a lot of pressure within the system because of the pandemic and all of that. But I think in the long term, most likely the Dems are going to have to cave on this just because of the way that the House and the House GOP is able to position on this right now to get this passed. Here is JP Morgan. They had Investor Day. And I want you to listen to what Jamie Dimon had to say about this.
Jamie Dimon, thank you so much for taking the time whilst you're in London to speak to us. The Fed. Today we're expecting 50 basis points hikes. What happens to inflation here? Is this your biggest concern?
So Francine, happy to be here. And to give a little perspective, we have, and this is contradictory what I'm about to say, but both are true, very strong U.S. economy.
Yeah.
Consumers in great shape, lots of money, spending the money, jobs are plentiful, wages are going up, though everything's distorted by inflation and all that, but those are good news, and businesses are in very good shape, and the Fed is going to have to raise rates and reverse QE. And they're going to, if they can, they're going to try to slow down the economy enough so that 8% starts to come down over time. And I wish them the best.
Yeah.
We're a little late, but remember 2 years ago we had 15% unemployment and no vaccine. So I think people should take a deep breath, give them a chance, and I think they're going to move. I think the sooner they move, the better. So yeah, they're going to be raising rates.
Deep breath, but can they engineer a soft landing, or is there a worry of recession in the
US? Of course, but none of us will ever know, right? But if I had to, I'm not a betting man. The odds are the following. Something like, yes, they can engineer a soft landing, 1/3% chance. Probably 1/3% chance they can engineer a mild recession. Think of, we've had mild Fed-induced recessions before, where inflation goes up 1.5% or 2%, everything slows down, inflation's coming down, and it's 6 or 9 months. And then there's a chance it's going to be much harder than that. And then in the face of all of that, you have Ukraine, which is a huge global issue. And
all right, so I'll stop the clip there. Mainly, he's covering all his bases on this, but he does get into the point of that we're going to continue to see raising rates, and this loom into what could be a long-term recession. Again, the debt ceiling is going to be a part of this as it starts to play out. But I think, the scenarios that we're going to be dealing with right now over the next 6 months are the things that will start to set a lot of pressures on crypto in general, but also within Wall Street. And this is something, as I've talked before, guys, is get ready, because dry powder right now is going to be one of the key things as you start to get into some of these markets. There's going to be some really great bargains, whether it's crypto, NFTs, Bitcoin, Ethereum, whatever it is that you like in those risk assets. We're going to see some great value in going forward. Here with Squawk Box, they talk a little bit here. Young extreme staffers in the White House have no appreciation for just how damaging a default would be. This comes from Ted Cruz. Listen to what he had to say.
So CNBC. So the S&P 500 is at 4,200. There seems to be a firm belief in the markets that a deal will be reached. It sounds like you're saying to market participants, brace yourself because we could actually go to default. That's a scenario that we are not pricing into the markets right now.
I agree. And listen, I think a deal will be reached. I think at the end of the day.
So even though you're saying Joe Biden's not going to be the vice president of 2011, you think a deal is going to be reached?
I think a deal will be reached, but I worry that the chances of a default are greater than they ever have been. I worry that this White House is reckless enough to force a default. I don't think that'll happen. I think that's less likely than not, but the odds are higher than we should be happy with.
All right, so I think the scenario here with Cruz is he's grandstanding. This is a pretty, bombastic statement. Does the White House actually go to the wall on this? If they did, this would be a cataclysmic event globally because of the amount of pressure it would put on many countries around the world, especially when you look at the world treasuries and liquidity within the markets itself and what that means for kind of the future of finance. So I think he's just looking for, a lot of press, trying to, scare it through in the sense of the GOP and the White House getting to at least some sort of agreement to be able to pull this off. A couple other tweets here that I think will play into this. This is 30-year mortgage rates approaching 7% again. Housing's going to take a big hit on this. Banks are also going to get hit on this. Banking crisis will continue to ensue. I would agree with that. Market capitulation, yes, we'll probably see some of that, especially on Wall Street as we go into it. And then obviously, Powell is going to have to go back with quantitative easing. And let me zoom in on that a little bit, just a little bit for you guys, because I know it's a little smaller. And that's going to take it up to 50 trillion. So this, to me, is going to be huge. Because if this continues to pressure, remember all of these trailing indicators that we've talked about for a year now, they're actually happening. We're seeing the housing hits. We're seeing the credit crunch. We're seeing credit now starting to affect business, which will affect jobs. Jobs is the lagging piece of the domino that really is going to be too late to catch the falling knife for the Fed to be able to pull us out of this. Now, whether or not we see a soft landing like what Diamond was referring to, I still think it's going to be a moderate hard landing with a moderate, recession, not a short recession, but a moderate recession. And this is just because of all of the indicators that are piling into us. The fact that we have another election coming up during this most likely will be the case. And the fact that we've got so many regulatory scenarios, and then the global competition, along with the world reserve being challenged, obviously, with things like BRICS and others around just reducing the amount of trade on the US dollar. Further into this is Curtin Shaw. He talks a little bit here. What will break first, rates or the housing market in the U.S. today? Buying rates cost around $2,700 a month versus renting a house at $1,850, which is the biggest gap since the 1970s. This is, again, another big point when you have mortgage applications are the lowest in 20 years. Housing is a big factor, guys, in reference to the health of economies. When you have something like this that's going to take quite a bit of time to reverse, possibly 6 to 8 months, maybe even a year, now we have real trouble within these markets. These are the kind of things that cause deep recessions to become a very deep cut. And that's the thing I think a lot of people are trying to figure out, how do we avoid this? I just don't know that there is a way for us to completely, well, I know there's not a way for us to avoid it, but it's really going to be the severity. And I think this is going to be a big factor, is housing, credit, and obviously the world trade. I think the world trade and liquidity of the US dollar is going to be one of the biggest factors out there playing into this. Here was Raul Powell going into, what does this mean for the next wave of opportunity? That's really what you have to be paying attention to. Is there going to be massive opportunity? Are we going to see, because remember, we haven't seen a bull run moving out of a recession in Bitcoin. 2008 was really the last time we saw something that would be even close to this. And even that I wouldn't say is a perfect comparison. Now you're talking about a recession, meaning bargain basement assets, and a bull run possibly coming together at the same time. This could get very interesting I think, for the crypto markets as a whole. Listen to what Raul said.
Liquidity is everything. All of my forward-looking indicators have been suggesting that liquidity is going to keep rising, and that it would drive crypto and tech more than anything else. And that's basically been the story of the year so far. And I think that continues. And that's confused a lot of people. The one trade that's confused me is the bond trade, and that's confused a lot of people. Bond yields should have fallen by now, and they still haven't. But I think this is to do with the debt ceiling issue, which is the other confusing thing. Because the debt ceiling issue has some real risks around it, and we don't really know how to price them. All we do know is people are pretty bearish around it. And I think that's reasonable too, to have hedged around it, because we don't know what can happen. But the chances are that anything that causes a paralysis of financial markets will lead to that expression I always use, more cowbell, more stimulus to come. So I'm going to run through a couple of charts very quickly.
All right, so I think he's right there. If we do get into a pressure cooker, with the debt ceiling, you're right. He is dead on. That will probably respond in a knee-jerk reaction to help offset the market capitulation that will ensue on this. Now, you have to be ready for this, because these are the kind of things that could be playing out to us. We're actually in a bit of a conundrum right now, because we have a potential where we could see assets fall dramatically. And the key here is whether or not you have the wherewithal to be able to hold those assets during these kinds of hold positions, and or adding to those assets, meaning padding your bag and getting ready for the recovery coming out of this. You may not necessarily catch the bottom of the knife, but you might catch that blade coming down. Those are the bloodiest. And in some cases, it's also the ones that prove the real millionaires and billionaires from the rest, because they have the wherewithal to handle that and hold it. And even if you're just putting in 10,000 or 5,000 or 1,000 within these markets, the ability to hold and see that maybe drop as much as 20, 30%, possibly even more, that's where it's really going to play out, I think, in terms of an opportunity. Bitcoin buys the rumor. This is on the U.S. debt ceiling as Bitcoin prices near 27.5. We saw a little bit of that price spike today. I'll show you a chart here in a second, but you can kind of see a little bit of there. 30,000 maybe back in the cards. One thing though, if you're in our CPI, we've actually been looking at this over the last little bit here on Bitcoin, because Bitcoin, this is on the 4-hour, Bitcoin has been doing a little bit of sideways action with these little pops that we've seen. This little climb here, this one right here on the 17th, and then of course this one right here on the 23rd, coming back up to around 27.3, 27.4. This is interesting because when you look at the CPI data in terms of sentiment, we've seen a little bit of a fall off. Then we saw a little bit of a move on Bitcoin and Ethereum on this as well. Ethereum also took the same kind of jump right up here to 1864, coming back in from right here on that local low around 1790. So drawing up a good amount as well. But again, seeing sentiment start to climb in two areas, both on our top line sentiment and on our amplification, has been intriguing, especially around Bitcoin. What does that mean? You know, join the Diamond Circle. You'll find more about it. We're dropping a lot more content over there. We're going to be doing an analysis on that over within that. So if you're in the Diamond Circle, you'll probably get a chance to catch that. If you're in our mastermind, you obviously will. All right, so a couple other things that I want to hit on here is TED Talks Macro. There's a bit of a narrative that is starting to also paint around this of what potentially could be causing a little bit of a slight move here. And one is Hong Kong Securities Commission, crypto trading to be allowed for retail starting June 1st. So this is China back at work again, using their sandbox, Hong Kong, to essentially continue to maybe play or make a play at digital currency, digital assets as a whole on a global perspective. This could be a big factor in driving some of the markets within Asia, which I still believe are one of the critical components of driving, especially crypto in general, and also the NFT market is still, Asia is being one of the solid positions out there. Now, when I see all of this happening, and then I look at the rest of the news in the market, I'm always looking for, hit pieces, FUD, something, because it usually indicates there's other narratives at a bit of FUD in the market right here. Well, this came from Reuters. Crypto giant Binance commingled customer funds and company revenue, former insiders say. This is so innuendo. Former insiders. I love this. Former insiders. And in the actual article, and listen, I'm not a big lover of Binance. I'm just saying, I just call a spade a spade. But they talk a little bit about it, that this was the case. But then right underneath it, it says Reuters couldn't independently verify the figures or the frequency. Then further into it, Reuters found no evidence that Binance client monies were lost or taken. So this again gets back into the scenario of certain press that looks for these massive, FUD, headlines. That also gives me a trigger as to, is something else afoot here with all of the things that are happening within the economic and the macro pressure. Obviously, digital assets have held up dramatically well under the conditions that we have right now in the markets. This is getting interesting because maybe there's something else going on here, guys. We need to be paying much more attention to it. Obviously, that's why you guys are tuned in, and we appreciate that. Make sure and smash the like button, by the way. It is one of the ways that helps other people learn about not only what's happening in digital assets, crypto, Bitcoin, etc. It also helps the algorithm to, one, get this narrative out there in the space when we can put these, these domino pieces together of what's happening within the market, news, data, stats, all that kind of stuff, research, and then pile it in so people that can digest it other than having to, filter through 50 websites and all sorts of charts and things of that nature. Hopefully that helps you guys out. Just as a precursor to this is Patrick Hillman. Now, just for clarity, this guy is the PR guy, Chief Comms Officer for Binance. So he has an agenda, just so we're clear. But even he drew this out. The whole base of their story this morning was when users purchased BUSD Paxos from Binance. there was a transaction page deposit on it. And users were making purchase on stablecoin that was redeemable by Paxos, which was explicitly stated on the page. That was basically kind of the framework of where they were going. But my point is, and you have to be careful right now. Don't get caught in these, especially if you're following everything, from Crypto Panic or other news. Most of these are so fast to get something out and get a headline out that in some cases it may not even be factual. So always do your fact checking the best you can. Check back in on those sources. Look at why, and is there a narrative that's painting around it? That's what we do here on the Crypto Pit. And dive into these, because there's always something, and it's what I tell our researchers all the time. Once we get something, it looks like it's going one way, verify it, make sure we understand that that is really the case, and then look at alternatives if there is some. And if you do that on your own research, then you're going to be safe. You're not going to end up selling your bag because you're panicked about something. But at the same time, you're going to be aware. So if you do need to sell your bag, you're going to have the information to do it. All right, so we're going to get into some questions today, maybe, I think. Let me see if there's, we got a few questions coming in. Let's get over to the poll real quick. Let's take a look. See what we've got. All right, so debt ceiling drama over this week. Next week at the 11th hour, I like that one, 57. You guys have really good insights. You're thinking because you know how the government works now. You understand how lawmakers basically draw down to the very last minute for the drama. Whether the White House will cave on this or the GOP will cave on this, I'm intrigued. All right, ETH going down soon, Jerry Crosby. ETH has been a little bit on the up and down on overall sentiment, but it has not broken out on a sentiment trend yet, at least ones that we're watching. So you may be right. We'll see. Jen Smith says, what do you think is driving price action right now on Render? I think we put it out in the mastermind the other day. There's a couple of things that we had. There was some website updates. Pudgy Penguins was a big deal. But at the same time, I think also people are coming around to Render, to what it means and what it could do for the future. Remember, we got a lot happening with Apple coming up with the Worldwide Developers Conference. You got a lot happening with Meta. There's a lot of companies that are going to start utilizing or needing the kind of capabilities that Render really brings to the game. So just be aware. Jerry says, thoughts on Exodus? I haven't used it. I've heard of it. I've looked at it before. It wasn't one that we really needed. We just did a video on this for the Ledger. If you guys didn't catch that video, go back and check it out. We're testing Arculus, Tangent, a couple others. We're going to be continuing to test wallets. I know a lot of you guys are really, concerned about that. I think it's a great hearing. Biden addresses crypto policy to international leaders. Yes, kind of. We have come a long way. Yeah, I agree with you. The fact that we're even in the narrative, by the President of the United States in a G7 summit shows that there is a lot happening. There is a lot going on behind the scenes right now, guys. There are deals being made in DC you probably don't even want to know. Tom T, John Deaton going live soon on Hinman. Emails, yeah, there's going to be a big break for the XRP guys. We're probably going to do a follow-up on that. We've got some additional research that we're doing on XRP. We'll try to get you guys a video out on that. One Bitcoin, these monkeys will come to an agreement in the last hour for sure. I like you. Paul Brunner says, Republican trying to get a hold of spending. Really, that's for sure. Republicans are really good at spending, actually. Very good at spending. Debt ceiling will make all the marbles crazy. Medium volatility. I agree with you, Crypto Future. Tony D says, hey, looks like Ledger is postponing Ledger recovery. Oh, imagine that. I can't imagine. That's great to know, because I think they just should take it off the table and reformulate that product in its entirety. Get away from that. Fire their CEO, fire their CTO, and get who are the board on this? They need some huevos, because this could have been avoided. Don't get me on that about Ledger. I really want to default. That would be crazy. No, you don't want to default. This would be, as my friend Darius Dale says, this would be apocalyptic. Like, we're talking zombies and, fighting with swords and knives. Not good. Whew, man, you guys are on it today. On fire as usual. We love it, the PBN family. Make sure and join the Diamond Circle. The way you get in that, it's also where we drop additional podcasts, additional content. Another thing we call audiocast, which are clips inside our Substack only. It doesn't even live on the podcast feed. You only get it in the audio of the Substack alert. So catch those, because those are pretty cool. If you're not following me on Twitter, make sure and come over there and say hi. It's just @Paul Barron. I'll catch you next time right here on TechPath.